Good morning. We will pay attention to budgets today to determine how much money is received in a specific month and how much payments will be made in a specific month. We have to record the budget for the period ended 30 June 2005. The first additional information that they give us is about the salaries. The entity contributes double the amount deducted from the employees to the pension fund. It is very important to determine what the employer's contribution will be so that you can calculate the correct figure. The following deductions is made from the salaries of employees. Pension fund, 8% of gross salary. Now remember, the gross salary is the amount that they offered you to work for them when they appointed you. The net salary is after deduction, so make sure that you know the difference between gross salary and net salary. Pay as you earn of 25%. During March 2015, a new employee had been appointed at an annual salary of 48,000. This is very important to determine whether it is an annual salary or whether it is a monthly salary. Because this is an annual salary, you have to divide by 12 to determine what is the amount per month. The bookkeepers did not take this salary into account and the deductions that were supposed to be made from the salary, so his salary will be paid in April 2015. So the money paid out in April will therefore be more than the money paid out in March. If we look at the additional information, from April, this monthly salaries amount to 16,000 per month. The annual stock taking takes place during May. Temporary labourers are employed to help. The additional wages will amount to 3,000. They don't say 3,000 per employee, so the total additional wages is 3,000. Provision must be made for this additional wages in the budget. No deductions and contributions are allowed for wages of temporary employees. Then there will be a salary increase annually on the 1st of June. So we have to take this increase of 10% into account in June. That will increase the amount that will be paid out for salaries. Okay, if we look at the calculations, dividends on investment. In November 2014, the business invested money in shares. So they invested 20,000 in R2 shares. If I divide the 2 and the 20,000, it means that they bought 10,000 shares. An interim dividend of 10 cents per share will be paid in April. So this will be money coming into the business during April. You must work out the number of shares, so it's 10,000 shares times 10 cents, and that will give me an income of 1,000 rand. On 1 June, the Lean Stores obtained a loan for 18,000 at 15% per annum. So on that loan, the money will be received in June in your budget. The loan is repayable in annual installments of 6,000 on 31 May. So it means at the end of the financial year, after they had the loan for 12 months, they will pay 6,000 rand. The interest is payable monthly. Salaries for April, they said, was 48,000. Divided by 2 gives me 4,000 rand. That is for the additional person that was appointed. According to them, the salaries before this person was appointed will be 16,000 Rand a month. So the amount that we will have to show as salaries for April will be 20,000 Rand. Okay, May, it is the 16,000 that they say that will be paid, plus the 3,000 for the temporary workers that will come and help out with the stock taking, and that will give us the total amount as 19,000. In June, it's 16,000 plus 10% increase on the 16,000, that will give me 1,600. So 16,000 plus 1,600 will give me an amount of 17,600. So if we look in the budget, the salaries figure will be the ones that we calculated now. In April, it's 20,000 because money is still outstanding from one employee for March. So we have to add that 4,000 to the 16,000 in the current month. In May, it is 19,000 because it's the monthly salary plus the 3,000 for the temporary employees. In June, it's 17,600 because it's the 16,000 plus the 10% increase. If we look at the pension fund contributions, in April, the salaries was 20,000 times 8% will give me 1,600. So I will show the payments for pension fund contributions in April will be 1,600. Okay, then in May, 16,000 times 8% gives me 1,280, and I show that the pension fund that will be paid out is 1,280. In June, the salary is 17,600 times the amount, and that will give me 1,408. Keep into account that in this specific example, I showed the total salaries before deductions because that is the total expense of the business. The pension fund contributions is only the amount that will be paid over on behalf of the business because they contribute equally to the pension fund. If we do a different question, you can be asked to do the salaries, the amount after deductions. Then you will have pension fund contributions where you will show the contribution of the employee and the employer, and you will show the amount that must be paid over to SARS. If we look at the calculation, we see that they invested 20,000 Rand. The cost per share was 2 Rand, so that means that they bought 10,000 shares. They received 10 cents per share, so the total amount that will receive as dividends will be 1,000 Rand. If we look at the interest on the loan, 18,000 was borrowed the previous year. 15% must be paid on the loan, and the interest is paid monthly, so we have to calculate it for 1 month. That will give me 225 Rand. Then the end of that month, we pay 6,000 on the loan, so it means the outstanding amount for the next month is 12,000. You will calculate 15% on that for 1 month, and that will give me 150 Rand. So if we look at our budget, we see that the installment on the loan will be 6,000 rand. The amount that we calculated for interest for the current year, a month, is 225, and for the next month is 225. Then they paid the installment that reduces the interest that must be paid to 150 rand.